Hi guys. Today we will analyze British American Tobacco stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. British American Tobacco is a medium performer in the overall market. Both the short-term and long-term trends are positive. This is a very positive sign. Support levels are around $42.50 and $40.50. Strong support levels are around $38 and $36. Resistance level is around $47.20. In the last month the stock has been trading between $42.30 and $47.20 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 5.5 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 14% per year, for last 5 years. We see that the average profit margin of the stock has been around 58% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 117% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for British American Tobacco Company: bad, average, and good. First scenario. The company will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 1%. Future profit margin would be low, 18%. Future free cash flow to net income rate would be low, 60%. In this case, the fair value of the stock today would be $41. Second scenario. The company will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 3%. Future profit margin would be average, 22%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $61. Third scenario. The company will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 5%. Future profit margin would be high, 26%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $88. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.98. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For British American Tobacco, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 10. Again, I will use 3 different scenarios for the company: bad, average, and good. First scenario. The company will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 1%. Future P/E would be low, 12. In this case, the fair value of the stock today would be $19. Second scenario. The company will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 3%. Future P/E would be average, 14. In this case, The fair value of the stock today would be $26. Third scenario. The company will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 16. In this case, the fair value of the stock today would be $36. As you can see, today the stock is overvalued, $46, even if we expect the company's high performance in future. The revenue is expected to grow only by 5% on average over the next 5 years. With a yearly dividend yield of 8%, BTI could be a good candidate for dividend investing. However, the stock is currently a bit overvalued. $35 is a fair price for this stock in my opinion. I have bought the stock at $35 recently, just for the dividend, but I do not expect any growth here. Company's strengths. A leading global tobacco supplier, British American Tobacco has a record of consistent growth, with gains in revenue, net income, and adjusted EPS over the last several years. The company continues to benefit from acquisitions, including Reynolds American and Drift Sciences. BTI's profit margin of 24% is amongst the best returns of the industry. With a yearly dividend yield of 8%, the stock is a good candidate for dividend investing. However, the company pays out 78% of its income as dividend. This is a bit on the high side, but may still be sustainable for a while. Risks. British American faces a range of legal and regulatory risks, including smoking bans, restrictions on package advertising, FDA regulation and risks related to allegations of bribery in its African operations. It also faces competition from established cigarette companies and manufacturers of smokeless products, as well as pressure from rising taxes and sales of counterfeit cigarettes. The stock has recently faced pressure from stronger FDA regulation of both smokeless and smokable products, including efforts to reduce nicotine content to non-addictive levels. The company has suspended its share buyback program due to its investment in Reynolds American. BTI has a return on assets of 4%. This is below the industry average of 8%. The revenue is expected to grow only by 5% on average over the next 5 years. In the coming 5 years, the EPS will grow only by 6% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.